Welcome to The Real Tea. I'm your host, Tammy Murphy, broker-owner of RH2L, bringing Miami Valley real homes to love.
And I'm Ellie Sollenberger to give my perspective as a home buyer.
We're going to give you the key to Miami Valley real estate.
So today we are talking about insurance for your home, auto, and anything else that you would like insured. Here's Mike Hild with Allstate Insurance.
Hey, thanks for having me.
Yeah, thanks for coming.
He seems so nervous already. It's like, it's okay, really. Just act like nothing's going on.
I'm just happy to be here.
We were just missing the beverage of choice, whatever you want to say there. But we're excited that you are here with us.
Well, thanks.
Obviously.
Yeah.
This is about real estate, but real estate is obviously involved with insurance, and people drive cars, and so they need insurance. So we're going to give you an opportunity to tell us why, one, we should choose you, but more importantly, why we should make sure that we do have insurance, and maybe some different types of insurances that are really important that people don't think about.
Yeah, and home insurance is it's such a minefield, and I work with so many hardworking realtors like yourself and MLOs, and so all the MLOs, the mortgage loan officers and realtors out there, thanks for what you do. I don't think the average everyday public realizes the amount of work that goes into closing a deal. So thanks for what you do every day. So yeah.
So let's start at the home buying process. One of the things is you have to get quotes for insurance, and then that is escrowed in, correct?
Yeah, so it depends on the lender, but most of the time, I would say about 95% of the time, the lender does want it escrowed, which means, it's paid up front by the lender, and then it's chopped up into 12 bite-sized pieces. So if your premium for your home insurance is $1,200, that means $100 of your house payment a year or a month is your home insurance.
Okay.
Yeah.
So then do you have to pay any of it up front at closing?
It depends on the lender, but most of them allow it to be escrowed in. So then your taxes and your insurance, so like I said, the insurance part of it would be, take the number, divide by 12, and that piece of your house payment is what you're paying for insurance every year. So, different experts say don't escrow it because that way you can track, if you see an increase or whatever. But it's really, I kind of disagree with that, because I think that if you look at your insurance, if you pay attention to your policy, and most people don't, to be honest with you, but if you pay attention to your policy and you see that you have an increase, certainly call us. And if you call your agent's office and you can't get a hold of your agent, then it's time to change agents.
Right,
yeah.
Absolutely.
If they don't answer the phone, then it's time to change.
So I think it also depends on the timing on when someone is closing on their home. And if it's at the start of the year versus at the end of a year, that also plays a factor on how much of the escrow funds they want to put in there. Maybe it's 3 months or 6 months. Rarely do you see where they ask for a full year up front. Usually what I have happen is that when a client will go to call and find out about the insurance quotes, they're like, oh great, that sounds good, I'll go ahead and take it, and they buy it. And then they don't realize that it was going to be included in and so we have to go through some extra little things so that doesn't happen.
Yeah.
So caution.
Yes.
Don't buy the insurance policy, just get the quote, and it'll be taken care of through the closing with the title company.
And really important to have like an agent who kind of guides you through that, because you can make a lot of mistakes up front if you don't know, and if you don't work in this industry. In my previous job before, I've been with Allstate for 14 years now, and before this, I had no idea how insurance worked, and I just knew that I paid it, and hopefully on time. So, certainly you want an agent who says, well, like if you go to like, oh, I want to pay that now. We have that happen every single day. I'm like, oh, hold on, let's slow down here. This is how it works, and then so just educating the customer, and really like the way that I train my team is to, send out the quote, and then make assumptions about coverages, and then like go back and go over every coverage, and that way they know what everything does on their policy. Because at the end of the day, I tell the customer, like, you're the boss, I'm going to do whatever you tell me to do, but you're going to know exactly what each coverage does, and that way you can make an educated choice.
Right, because most people are going to go by price, and they're going to say, well, what's the cheapest?
Yeah.
I want a $600 a month instead of the $1,200, but then they don't realize what they're actually costing themselves when a claim or something happens.
It's true.
That now they have to pay out of pocket a higher deductible or something.
Yeah.
Right?
Yeah, and there's a radio host that suggests a $2,500 deductible on your home. And that is okay, as long as you know what, as long as you know what you're getting, as long as you know that that's your fair share of a claim. And sometimes people call and they're like really surprised. They're like,
Right.
oh, I elected a $5,000 deductible on my home. And it's, I personally don't think it's a good idea. Like, and if you go by statistics, the average American doesn't have $1,000 for an emergency laying around.
Right.
So I try to use that like conversationally and anecdotally with our customers and say, okay, would you have this money laying around if you had a claim? And ultimately it gets paid to the contractor. I think a lot of people assume it gets paid to the insurance company, and it does not. It gets
Right.
paid to the contractor or whoever's performing the work.
Right.
So
And that's a really good point for them to realize, is that if something happens and now you have to pay out of pocket, are you more comfortable paying $500
Yeah.
or could you handle $2,500? And is the difference when that happens worth offsetting what that difference in your mortgage or your insurance premium is each month?
absolutely.
So if it's
Yeah.
only a difference of $35, but now you went from $500 to $2,500, I
Yeah.
don't know that math adds up.
Right.
I mean, I know that it doesn't add up, but for some people, maybe it does.
Right.
Yeah.
Yeah. You got to put those numbers in front of the customer and have them make an educated choice. So,
Exactly.
yeah.
So let's go back to when you're looking for a quote. What do you need from a potential home buyer?
So generally speaking, the way, and I don't know how other companies work, because we see some, and quoting against other companies is interesting, because I'm a student of life. I'm like, well, why is this one insured? The same company, different agent. Why is this one insured for? Seems to be well overinsured, and this one seems to be underinsured. So our process is so basically we need their basic information, and then the address for the house, and then basically the age of the roof, because most companies now, the roof rating is very critical.
Mm-hmm.
So that's something that, with home inspections, again, with your realtor, it pays to have a good realtor who has a good home inspection guy. And then we open that discussion up. I mean, basically, I'm going to use like 3 different websites, Realtor.com, the county auditor site, Zillow, some other sites, and I'm going to collect all the data about the home, and I'm going to put it into a proprietary software system that's specific to my company, and it's going to spit out a number that says this is what you need to insure the house for it to be full replacement cost. You do want full replacement cost. There are different ways to insure a house that are not replacement cost. There's market value, and there's what they call actual cash value. So an example would be if you bought a house that is in like kind of a declining area or whatever, and the rebuild value of that house would be, if you just use the software tool and you use like just objective data, and it says, okay, it's 5,000 square feet, it's got a ballroom or whatever, but it's in an area that's kind of declining, so you bought it for $100,000. The replacement cost on it would be $700,000 or $1 million or whatever, and clearly you're not going to be paid out that amount of money. So
Yeah.
so then that's where you choose like select value or like an actual cash value on a house. But most of your policies, if it's your primary residence, it should be replacement cost.
Okay.
And that varies, obviously,
It
based
does.
on the market and everything that's going on.
Yeah, and there's a little bit of subjectivity in there. So like, so I put the data in, but also you choose like, is it like a custom kitchen where you have like granite countertops and everything was, or is it something you could buy from Home Depot or Lowe's and throw back in there if something happened to the house. So
Okay.
So in the purchase contract process, one of the things that changed a few years back with the Dayton area was that the timeline for being able to get your quote on your insurance was actually given a stipulated time. So there's always an inspection period, and they have this insurance period now that's on there, which may or may not be the same time that you're doing the inspection. So when I work with clients, it's always important to say, this is something that we have to check right away. People are used to checking for their insurance quotes before they go to the closing table. Like that was one of the last things that they would do because they weren't buying it, they just needed to have it for that process. But obviously with that contract change, it made a difference and what people were surprised to find out is what the insurance cost was, and they weren't factoring it into, because the loan officer is giving them their principal and interest payments. They'll include what's the property taxes because they have access to that. So if they didn't have that piece of the puzzle, your home buyer wasn't really looking at what their true full month payment was going to be. On a difference of $35, like we said, probably not a big deal. But if you get into a specialty type home and you get in with coverage that is going to be all of that, and then you throw in flood insurance, you're talking about the potential of a difference in your monthly mortgage payment substantial. And in some cases, buyers were being priced out because of then what they were finding out on the insurance.
yeah.
So I actually just saw this on TikTok the other day,
my
because
word.
that's where I get all my information from. And it was specifically talking about Florida and how there are a lot of insurance companies that are refusing to insure homes in Florida because of hurricane insurance. And people, everybody's trying to move to Florida to the beach, and then they're finding out that they can't afford these houses at the closing table.
Right, right.
And the realtors down there are like, no, you need to check this before you even put in the offer
Yeah.
to make sure that you can afford this.
Yeah.
I think one of my friends in Florida just mentioned that what they paid a month on their insurance was $1,600 a month. I mean, that's what some people are paying on their mortgage
Yeah.
for the house.
Yeah.
But now you say that's my cost of my insurance. I mean, it's a big difference.
Yeah.
So we've had a lot of tornadoes here in this area. Do you see that trend coming to Ohio because of our weather?
Knock on wood.
We're very blessed in Ohio. So Ohio is a low premium state, and so it's a funny dynamic as an agent because I have friends that are agents in New York and Florida and that, and they for the same amount of customers, I mean their books of business are premium wise, I mean much higher, 2 or 3 times higher. So we're very blessed here to have low insurance premiums here. I know specifically what you're talking about. My dad is a snowbird now. He's 72, and so he snowbirds down to Florida, and they couldn't get wind insurance for their senior park or whatever that he lives in or whatever. So I don't see that here. I mean, it is a big problem. I mean, and a lot of companies have pulled out of Florida because because of the losses and all that. But I don't really see that here. I mean, I know our losses are up. I mean, I think just across the industry. I mean, the insurance industry in 14 years of doing this now, I've never really seen the level of losses that we're currently seeing now. But I don't see. I mean, knock on wood again.
Yeah.
I don't see like a wind insurance type policy coming along. Now, one fun fact is that most people don't know you can split your deductible. So then, you have like an all peril deductible, which is like your fire, theft, smoke, whatever, and then you have your wind and hail deductible. And so people say, well, I could save some money by doing that. But I mean, the most likely claim, statistically speaking, I think in Ohio is you're going to lose shingles on your roof from a windstorm or a tornado or something like that. So I say, don't mess with the deductible, leave it the same.
Yeah.
Interesting.
Yeah.
Because I think Ohio was at the end of May, they said we've had 62 tornadoes in our state. I mean, that's kind of a lot. That's setting a record, unfortunately, in a negative way. So I think that would be something that people would be questioning is, are we going to see higher insurance premiums as a result?
And I think we already have. I mean, to a large degree, I think. I've never seen anything in 14 years like this where every single company, and being a captive agent, sometimes it's difficult when you're competing against the independents who have like so many different carriers. Well, we're taking customers now from independents because they're all every company's taking increases now because the amount of losses. But we try to mitigate that. I mean, I've got one of a pretty substantial book of business, and we try to do policy reviews with our customers and just to make sure we keep their premiums in line and stuff like that. There's always options. If you call in to the office or you email, we set up a policy review. Generally speaking, about 75% of the time we're going to be able to offset some of your premium.
Which I think is funny because I had insurance with another company, sorry, because I didn't know you,
Right.
and had my insurance with them for house, autos, everything like that for 10 years. Never ever thought about calling and saying, hey, can I save any money on any of this? And one of your people called me and she's like, well, let me run your numbers and see. And I was surprised at the money that I was able to save just really by making a comparative analysis like that, but changing to you.
Yeah.
And obviously now I know, well, I should have been doing annual reviews and checking this out. I mean, silly for me not to do that. But
Yeah. So speaking of saving, what are the different things that Allstate offers that do offer savings? Like, you hear bundle all the time.
Yeah, and it's funny because there was a company a few years ago, and I think they were more of like an indemnity company, like an SR22, or you had kind of a higher risk driving record or whatever, and they were kind of making fun of the bundle. But the bundle is where it's at in insurance. In any company, well, there's like I work out in the morning with a State Farm agent, and the bundle is where it's at. I mean, it really is. And so like putting your stuff together is the key to savings. And even if you have, and we always try to educate our customers, and I mean, bless my staff, they're ninja warriors. I mean, they like you mentioned like the turnaround time for for quotes. They have to have a quote back like within hours. Like there's no like, oh, I'll get it to you next week or tomorrow. No, like they we all work at the same pace, and they're amazing. But yeah, there are different factors. If somebody comes in and they have like, so I talked to a potential client earlier, and she needed an SR22, and so then my job is to kind of coach them and say, okay, SR22, you can buy it anywhere, right? Like we really don't. That's that means she needs a bond on her car insurance because like she can't, she's got something going on with her driving record and she needs a bond. So my job is to kind of coach them through that and say, okay, this is how you get to a preferred auto rate. This is how you get the best possible rate. And that's who we want as a customer. We want you to have the best possible. We want it for you, but we also want it for us because the indemnity business, it comes and goes, and they sometimes people just come in to get insurance to go to court and then they disappear or whatever. So, but we want people to be preferred customers and get the best rate possible. So the bundling is the biggest factor, but also like, cleaning up the driving record and that kind of thing.
So do you do credit checks when you do insurance quote for people?
Most of the companies that I know of run some sort of credit. Now, we don't see a traditional credit score like a 700 or whatever. We see what's called an insurance score. So it's a composite of the keys to the kingdom, and especially in auto insurance, are your continuous prior insurance. So if you have 5 years of continuous prior auto insurance without a lapse, that's great. Okay. It does touch on your credit, and we run a light credit hit. We don't see a traditional score like a 700. It's a composite of these three things. But credit is used by most companies now in buying decisions. Mm-hmm. It just is. And then unfortunately, until somebody steps in and says, you can't do it anymore, right, it's going to be what it is. So, prior insurance, the credit, and also like your driving record then is the third thing. And those things are, those are the kind of the keys to the king to getting a good rate.
So for home insurance, do they run the same things?
They do run the MVR, and Allstate just really started that a few years ago. But it's kind of a total assessment of risk. Do I agree with it? I don't know, but they do run the driving record as well.
Oh,
so yeah,
that's interesting.
Yeah,
in case you drive through the house.
Yeah, I'm like, I'm not really sure about the logic behind it. It's like, are you a risk taker?
Is
I don't
that
know.
a claim against the house or against your driving record? I'm not sure.
Right. If you drive fast, it doesn't mean you smoke in bed. I don't know what that I don't know what that means, but it's nice. So here we are. So.
Something else that sometimes has been talked about is called a clue report.
Yes.
Because sometimes, like we talked about, the age of the roof or something like that, we may be dealing with a situation where we don't have that residential property disclosure or information from a source that could tell us what was going on with this house. Is it pretty standard practice that you all will run a clue report on a house, and explain to us what a clue report is?
Yeah. So a clue report is just like running the driving record. It's a loss history. And the one thing that we do in our agency that's different than most agencies is we actually research those. So we get on the website, Ohio Crash Reports, and also with home losses specific to this. Then we actually we'll talk to the customer and say, hey, like what happened here? Is this something that something that should be chargeable? Like is it something that is going to affect your rate or create a surcharge? And a lot of times we can exclude things, or maybe it was something that was, like I said, we run the driving record, and sometimes it's reported as an at-fault accident by a different company, and if we can change it to a non-fault, that changes the entire picture for the pricing, of the house or whatever. So the clue report, sometimes it's it's the prior owner, or so you have to like drill down and do your research, and that's one thing that I really focus on in training our new agents is like to drill down and actually look at the data and don't just like do the quote and send it out and like whatever. Right. Communicate with the customer and teach every customer that you talk to. Teach everybody that you talk to. I want you to teach them something about home insurance.
So a buyer coming into it who has a clean record or no record because they haven't owned a home before, but if the prior owner of that house had a series of every other year they were having an insurance claim, yes, that's a negative impact to the buyer, even though it's not the buyer's fault. Correct?
Right. Well, we would be able to remove those. If it was the prior owner, we would be able to remove them. But it is a point of interest to know that,
something's going on.
You're curious to see, like, okay, well, if they had 3 basement claims or whatever, like, do you really want to buy that house? I don't know. So
that's interesting. So what if the prior owner lost it in foreclosure? Does that affect anything?
We can't see that, but I mean, other than like researching it on the auditor site, I mean, we might be able to, because I actually look through those records and see, then it says, okay, owner, and then the bank, whatever bank, and then, but we really can't. It doesn't affect anything as far as pricing or anything like that.
Okay. So what are some other things that you can get insured onto your house? Like I know I've gotten jewelry before.
Yeah, so you can do riders for jewelry, guns. There's all kinds of, I mean, pretty much there's so many different things. The biggest thing is like water backup is a huge thing. And so one like educational point is there are different kinds of water coverage for a home policy. And so if a pipe busts that's like inside your slab or inside your wall or whatever, that's probably covered under just your normal policy. And then you have water backup coverage, which is if your sump pump fails, or if like you have a backup of a drain, or sewer or something like that, that's an additional rider that you add onto the house. The average water backup claim, my understanding, and I don't know if this has changed or not, but about a year ago I heard this statistic that the average water backup claim is $7,000. Wow. Most people carry $5,000 in water backup coverage, so I would recommend going to at least $10,000. And if you have a finished basement and it's a huge basement, you might want to consider more.
Yeah. So with that claim, if you have $5,000 of coverage, you would have to pay, say your deductible is $500 plus the $2,000 to get to the $7,000.
Right.
So you'd be out $2,500
You would
as
exhaust
the homeowner.
Yes, you would exhaust the limits on that.
Okay.
Yeah.
And then does it reset after that?
It's per claim.
Okay.
Yeah. So yeah, I would always encourage people to at least consider like $10,000, unless if you call and you say, you know what, Mike, I have an unfinished basement. All I have down there is my mechanicals. I've never had, then like I said, the customer's the boss. They're going to make the decision, but they're going to be educated about it and they're going to make an informed decision. Yeah. And ultimately, they'll tell me what they want to do.
So, what is the craziest claim you've ever seen?
I mean, there's been a lot of them. I mean, animal claims are always like just strange, like where like a dog destroys a house or something like that. I mean, we've had some of those, and people that are secretly working on their house and like moving walls and stuff like that, and then they don't tell anybody about it, and like they're literally taking out like support walls, and then they're like, oh well, that's a claim. I mean, it's really not because you caused it. So yeah. so I mean, we had some doozies there, but yeah, I mean, mostly like the animal claims are just a head scratcher. It's like, yeah, this dog went through and he, tore holes in the 6-panel doors and like, he ate a wall. I'm like, that dog ate a wall. That's interesting. Yeah. I don't know how that worked out, but yeah.
And they filed a claim on that?
Yeah,
like they didn't...
yeah.
Can you include pets on your homeowner's insurance?
So pets are like pet damage, you mean? Mm-hmm. I mean, that would be, that potentially be covered under your regular policy or whatever, okay. But I mean, there's riders for just about anything. I mean, jewelry and guns are the most popular. Jewelry, I mean, and most people don't know this. For jewelry and guns, you have a per piece limit and you have a blanket limit. So, for instance, like on our home policy, the per piece limit is $1,000. So then if you have a $2,000 diamond ring, you want to get that scheduled. You want to name that on your policy. Yeah. And then you can actually have that insured with zero deductible and make sure that it's properly insured. And it's the same thing with guns. They have a per piece limit and then there's a blanket limit. So then if someone, something happens, there's a house fire and you lose all of your jewelry, the most the company will pay is $5,000. So then by scheduling that $2,000 diamond ring, then you back it out of that $5,000 limit. It's covered. Some companies call it like a
line item at that point.
Yeah. Some companies call it a personal articles policy, and we just add it to the homeowners.
So if it is insured on an individual line, does it have to be lost at the house for it to be a valid claim? Or like if you're on vacation at the beach and you lose it in the sand?
Yeah. So I actually had a customer that called me one time and he said, I was in Florida on a business trip and I was in the ocean and my wedding ring got caught by a wave, pulled off, and diamond crusted. Yeah. So it was a head scratcher. But yeah, it said his wedding ring got caught in a wave and was washed away, and they covered it.
Oh, interesting.
Yeah. That's awesome.
So do they need an appraisal or pictures of these types of items typically?
Yeah, so to add it on the policy, we have to have an appraisal or a bill of sale. So there has to be, proof or whatever, otherwise.
Or grandma's heirloom doesn't count?
I don't know what that would look like. We just all willy-nilly adding, jewelry to their policy or whatever. And then,
well, I think you can take a piece of jewelry that's an heirloom to a jeweler, and they'll
Yes.
write up,
Yeah.
what it's worth.
Yeah, there's several good jewelers out there that actually provide photos and so yeah, we can submit those. And the good thing is we keep them in a cloud-based storage system that's for the company and all that. So if you ever lose that stuff, God forbid something happens to it, we have a copy of all of that stuff if it's scheduled with us.
So if there is a claim that someone has to make, what is the typical turnaround time for them to get made whole or receive reimbursement at that point?
Yeah, so it depends on the kind of claim. I mean, the jewelry claims surprisingly have been very fast. Roofs are always difficult. I mean, roof claims are always difficult because there's two sides to that, and so sometimes you have a contractor that comes out and they're driving past and they say, well, it looks like you have storm damage. My advice to customers is to always quantify that storm damage. Have the roofer quantify that for you. Don't say you have storm damage and then let's just
Put on a new roof?
Yeah, let's file a claim and see what happens. Let's see what your company says about it. And so I always tell them hey, have them quantify that. Say how much damage do you have? Is it 5 shingles? Is it 50 shingles? Are you recommending a repair or a replacement? And then also read the fine print. There's 60 pages. On our home policy, there are 60 pages. It's called the policy jacket, and that's the fine print. That's the legalese of the policy, and that's the part that says, well, you might want to see what it does if you do a repair on your roof versus doing a replacement. What does that do to your coverages? Because a lot of times it does change your coverage. If you have a subsequent claim after that, it may not be subject to the same rules.
Oh, okay.
So always read the fine print.
So when you're bored and you've read your home inspection report,
If you want to
then
sleep.
you get to read your insurance
You're
policy.
right.
I mean,
Have
You're
you
having
ever
trouble
had
sleeping.
somebody who's read every single line of that?
Oh, I've had engineers are the best. You will they will call you and 5 phone calls and I love them to death. But man, they just every minutia detail stuff that sometimes I love to be challenged. I mean, 14 years in this business, I love those phone calls. It's so what about this, Mike? What about this thing, this line item here? I'm you know what, Joe, I didn't even know that was in the policy. So let's go take a look. That's just something maybe they changed and slid past me or whatever. So, but yeah, engineers and the type are. I mean, they're very detail CPAs. Very detail oriented.
other attorneys.
Attorneys, yes. Contract readers, yes.
So when somebody does file a claim, does Allstate pay the homeowner or does Allstate pay the contractor?
So they can set it up different ways, but most of the time it's the homeowner. And so the other thing is with that is a lot of times I almost would rather see the money go to the homeowner because then you have leverage to make sure that the job is right. Because sometimes if it's paid directly to the contractor, we've had instances where maybe the job wasn't complete and it might be 1 or 2 little small punch list line items, but then you have leverage and you're holding that money out there until the job is completed to your satisfaction.
So are there anything that's at a home that can increase the policy or decrease, like a pool or a trampoline or having a rail on something that would make it go down?
So when we write a new policy, there's an inspection period so that an inspector, so sometimes they'll do a satellite inspection, which is, I don't really know how that works, but it's clearly
They send a drone?
space, space age, whatever. But they do send out an inspector just to make sure that there are no what they call hazards. You don't have a broken window or some, you don't have a handrail. You got 10 steps going up to the front door and no handrail or whatever. So, but mostly, things like pit bulls and Doberman Pinschers, German Shepherds, pools, they all used to be hazardous, insurance companies. Pit bulls were used to be excluded. When I started here 14 years ago, pit bulls were excluded. You couldn't write a house with a pit bull unless the customer could produce a document and say the pit bull was a mix.
No.
That happened a lot.
Is that why there's so many pit bull mixes?
Yeah,
around?
that happened a lot. Yeah, all pit bulls are mixed, right? So
Yeah.
But so now, I mean, there's less and less of that. I mean, there are things that would make your your property. Trampolines are always funny. I mean, if you're going to have a trampoline, you have to have an enclosure. It can't just be the trampoline. It has to have the net around it and stuff like that. So, but yeah, now I mean, pools aren't really much of a problem or whatever. I mean, and the other thing too is since you asked about it going up, I mean, we've had a lot of phone calls recently because the market, right?
Oh, yeah.
don't get you started on the market, right? Yeah. So, but the market, I mean, so what's your home value? I mean, it's crazy now. I mean, I don't know, home values are just off the charts now. So then as you see those increases in your insurance policy, pay attention to you'll get like a brief paragraph that says this is why your policy went up. And a lot of times what that is like they're increasing the value of your home because your contract with the insurance company, your insurance policy is a contract, and that contract says that they will insure it at replacement cost. And so that's why you see it like creep up in value. So then your personal property, your other structures, which is your barns and your sheds, your pools, your decks, all that stuff, and your dwelling, which is the main house itself, all those things will creep up in value just to keep up with inflation because your insurance policy is a contract with the insurance company, and it's replacement cost.
So did you see a big jump between 2020 and 2022 when like the cost to build a home went up, 60%?
Yeah.
There's been a significant jump. I mean, and every company is experiencing that. It's the craziest thing. I've never really seen. I mean, 10 years in the business. I mean, it was pretty steady.
Yeah. And then the Memorial
last
Day tornadoes happened, and it's just gone downhill.
The last 4 years have been a wild ride. I'm telling you what.
I don't think we're done yet. So.
Right. There's no end in sight. But yeah. But it's been, I mean, we're starting to stabilize a little bit, and it's funny because there is a cycle. I'm a student of the game, and so I pay attention to what's going on around me. And there's a cycle of like when the companies take their increases and stuff like that. So I definitely would recommend call your agent, do a review, and always check it out. Check it out some.
Are increases usually at the beginning of the year or when your policy renews?
It just depends on the company. Some of the companies hold out to the very end, and not naming any names or anything, but normally our company usually takes an increase before anybody else does, and then the other companies. So they have actuaries and people that are way smarter than I am, sitting in a room with a calculator, calculating risk and trying to foresee, trends and things like that. So that's, they base it on those trends and the losses and stuff like that we were talking about earlier.
Yeah.
And normally we take, if there's going to be a rate change, we take ours pretty early on in the game. And then the companies usually follow suit.
That's interesting. Yeah. This has been very informative. So we always end the show with some kind of tip for the viewers, and you get to give the tip today on insurance.
Oh boy.
What would you tell our listeners?
So I would say, just read your policy. Most people don't read their policy at all. At least know what your values are, because the most common thing that we hear in the office when someone isn't properly covered for something, and the calls are recorded, so we know. I mean, we can go back and pull call recordings and stuff, but it isn't something that you don't want to do that as an agent. You don't want a situation where your customer is not properly covered. Right. You don't want to have that conversation. So and that's why I tell my team, make sure that you teach them something about insurance. Make sure that they're making the decisions, but they're aware of those decisions. They're making educated decisions. But read your policy, and that way you don't say, because the most common phrase is I thought I was covered for, or I thought this was on there, or I thought this, or I thought that. Okay. And so we don't want that to happen to you. So just make sure that you read your policy and just kind of know. And if you have questions, certainly get out in front of it and ask.
Mm-hmm. Thanks. Well, if you have insurance needs, reach out to Mike Hild with Englewood Allstate Insurance.
Yep.
And we're going to put your contact information down below so people
Awesome.
can reach out. And
thank you so much.
We're so happy that you came in and saw us today.
Thank you so much. You guys are great. Thank you.
Thank you. Thanks for joining us today on the Realty Podcast. If you enjoyed the knowledge and entertainment today, please subscribe and share with your friends. We will be embarking on a journey that bridges the gap between realtors and clients, uncovering the heart and tea of real estate.